Good afternoon. George Cavaligos for HFT Bonds. A lot of you guys know that I used to be a teacher. Taught high school science. One of my favorite things to teach kids was to try to learn something new every day. And I'm still working on that one. Last night I highlighted a couple levels that I thought would be good areas to try and buy the market. I specifically highlighted the 133.15 plus level, the previous day's opening range, and I think the previous day's settlement, the day before that, settlement price in the 10-year. Market wasn't doing much last night, went to bed, put the bid at 15 plus. I made it at my T, but I put it at 15 plus. And I didn't get filled. The low was 16. I woke up this morning, I looked at the market, it was trading 24. And got to the office, it was still trading 24. Shot all the way up to what, 29? Left a lot on the table there though. I think what I'm going to have to remember to do is you can try and pick these levels, but there's no guarantee you're going to get filled every night at a specific level, especially an obvious one. I got cocky because I called the low the night before at 11 plus, got some fill there, and I got all cocky and oh man, well, the market always has a way of bringing you back down to earth, doesn't it? So I missed that trade last night. I think what I need to do is maybe scale in, around a support level, okay? So let's say we're looking at 133.20 tonight as a similar support level on the 10-year. So 20 and a half bid, 21 bid, something like that. 20 and a half bid, 20 bid, scale in small each level with your stop below 18 half. I think that's my game plan for tonight on the 10-year levels. We'll see how that works out. Give it a try. I think it makes sense to me, to try and call specific levels every night or every day is darn near impossible. We can get close, but we got to be prepared to try and scale in and out, I guess, is what I'm trying to say. So we do get some satisfaction, some fills. I'm kind of bummed that I didn't get filled last night. So that's my solution. I learned something today. Okay, we did catch, after the run-up this morning, we did hit, some pretty important levels in the market. We filled the roll gap to a certain extent in the 10-year. We got into the roll gap in the bonds, but the bonds have been lagging, remember, the last couple days. They didn't quite fill the gap. I think 150.23 would have filled the gap. Some guys were saying 150.28. I'm not sure. I don't have the chart in front of me right now. I'll have to take a look at that. But we went up. We got up that 150.14 level that I've been talking about the last couple days. C equals A. We went a little bit above it. And then the market reversed and came back below 150.14. Remember we talked about that yesterday in the video, the upthrust, where the market breaks a resistance level. We broke 14. We went up, but then we came back down below 14. We were messing around there, back and forth, back and forth. Put a small short on at 15. Watched it break down, to the big volume area around 150.08, 09. I think I covered some against the opening range. I think it was 09. Oh God, 08, the first time down. That was the opening range. That was the big volume level too, where that big curve steepening trade was put on this morning. Jack highlighted it in the chat room where there was a big buyer of 15,000 5-year notes to sell bonds, and they were selling the bonds around 08, 09. So once we got there, I said, okay, that's a big level. It's the opening range. We got to cover some there. Move the stop down to break even at that point. I still got the stop at 15, and I'm working a 4 bid, but it does not look like I'm going to get any gratification here with another 20 minutes into the close. Decision time. I think I'm going to cover them right now. It's trading 7, 8, 7, 7. Might as well just cover them. Take your, whatever, 8 ticks and be happy. That was a decent trade. Made some decent money on a small short off of that 14-15 area. Again, that's going to be kind of key. Remember how I talked yesterday about a lot of times when you see these upthrusts and springs where you break out of the range but then you come right back into it, there's a tendency for the market to go back and test the lower end of that range again. That'd be interesting. 148. What was it? 149 even. 01, 02. 149 even on the bonds. Another point lower from here. That'd be cool. 133.09 on the 10-year. Another 17 ticks. Sure. I'll take that right now. That'd be a great move in this environment. The other thing is I wanted to highlight, and I should send out a chart on this. Maybe I'll do it tonight when I get home or tomorrow morning. If you look at the rally off of the lows from Monday, you can see 5 waves up. 1, 2, 3, 4, 5. But the highs and lows are overlapping each other. So it's pointing to a corrective pattern, this rally being a corrective pattern and not a new bull leg, not an impulse move. With 5 waves up, we got to be very careful. And it looks like if we break down below 149.31 in the bonds, you break the uptrend line there too. So I'm going to be careful with these buys tonight. I'm going to keep it smaller than usual, I think, and make it, a 1x position maybe. ECB tomorrow morning, Bank of England tomorrow morning, jobless claims tomorrow morning, day before unemployment, 2 Fed buybacks. I think the buybacks are still the key. So I will still buy a little bit tonight, tomorrow morning, whatever, But that's the plan, and keep it small because it is the day before unemployment. Got the webinar tomorrow afternoon. Should be interesting, guys. Please join us. It's always fun. Ask questions, whatever. Bonds are going to be tough to talk about. We've been in this range for so long. You guys have seen all my stuff for so long. I don't know. I got to go dig up something new for the webinar tomorrow. I'll spend the day trolling the markets tomorrow, looking for something good. I think a lot of what we can talk about are these rollover gaps. I think that's a real interesting phenomena. 30 years of floor trading, you pick up all these little quirks in the market. Rollover gaps. Don't see big sell-offs during rollover frequently. Kind of stuff like that maybe we'll talk about a little bit. I don't know. We'll see. I'll run that by some people tomorrow morning, see what people think. All right, got the game plan. I don't think we're going to be looking at new highs tomorrow. I think what we'll be looking at is a retest of maybe these breakdown levels or today's highs. In the bonds, I'd say we could, get back up to that 150.14.15 area. If it holds 149.31, that's C equals A. That says we're probably going to go retest the highs. If it goes a little bit lower than 149.31, takes away some of the bullish potential there. So we'll see what happens on the dip here and what we're going to look for on the upside. But the way the curve's steepening, I'm getting more and more nervous about what this move up off the lows has been and playing this Fed game. Friday, the Fed is actually selling notes, pretty hefty, 7-8 billion in notes on Friday. And tomorrow, we also get the refunding announcement for next week. Auction next week, 3s, 10s, and 30s. All right. So we're going to be looking for, some kind of an important high made. Either it was today or over the next 3 trading days. Thursday, Friday, Monday. So we want to be on our toes. I think we could see a decent pullback into the auction. And then we'll see after that. All righty. All right, decent. All right, good day. See you tomorrow. Have a great night.